For 25 years, Google has been synonymous with search. When you needed information, you didn't search for it, you Googled it. The company built a $175 billion advertising empire on the back of 90% market dominance. But something unprecedented is happening right now. In the fourth quarter of 2024, Google's market share dropped below 90% for the first time since 2015. It's now hovering around 89.73%. That might not sound dramatic to you, but in a market where Google hasn't faced meaningful competition in over a decade, this is seismic. Zero-click searches, where users get their answer directly from Google without clicking any link, have exploded from 56% to 69% in just 1 year. Publishers are bleeding, competitors are rising, and the Department of Justice just handed Google 2 devastating antitrust losses. Is this the beginning of the end for Google, or is this just another challenge for a tech giant that's weathered storms before? Today, we're going to examine the data, the competition, the legal battles, and most importantly, what this means for your investments. I'm going to give you the bull case and the bear case, and you can decide for yourself whether Google's dominance is truly under threat. Let's dive in. Let's start with the numbers, because the numbers don't lie. Google's global market share currently sits between 89 and 90% as of the first quarter of 2025. Now, to most people, 89% sounds insurmountable, and it is still dominant. But here's what matters. This represents the first sustained drop below 90% since 2015. In the United States specifically, the erosion is even more pronounced. Market share fell from 90.37% in November 2024 to 87.39% in December. That's a 3% drop in a single month. On mobile devices, Google still commands 94.6%, which remains incredibly strong. But on desktop, where users have more choice and more flexibility, Google's share has fallen to 82.2%. Desktop is more vulnerable, and that's where we're seeing the cracks appear first. So where do these users go? Bing is hovering around 4% globally, but in the US, it's reached 8.16%. Yandex, the Russian search engine, holds 2.49% globally. Yahoo still exists with 1.33%. And then there's this growing other category. That other category is what should terrify Google because it represents fragmentation. It represents users experimenting with alternatives. It represents the beginning of a behavior shift. Notice these aren't huge jumps. Bing didn't suddenly capture 20% overnight. In a market where Google hasn't seen meaningful competition in a decade, even 2 to 3% erosion is seismic. That represents tens of millions of users exploring alternatives. And once users start exploring, once they form new habits, it becomes very difficult to bring them back. Now let's talk about the real threat, the existential threat, AI search. On October 31st, 2024, OpenAI launched ChatGPT Search to Plus subscribers. On December 16th, it became available to all logged-in users. Then on February 5th, 2025, OpenAI made it available to everyone, no login required. And the adoption has been staggering. As of the second quarter of 2025, ChatGPT commands 9% of all digital queries globally. Think about that. In less than a year, ChatGPT captured 9% of the search market. ChatGPT now has 400 million weekly active users as of February 2025. Just 15 months earlier, it had 100 million weekly users. That's 4 times growth in just over a year. And here's an even more telling statistic. Referrals from ChatGPT to news sites grew 25 times year over year. Users aren't just asking ChatGPT questions. They're using it as their starting point for web exploration. Why is ChatGPT Search different? Because it's not trying to be Google. Traditional search engines give you 10 blue links, and you have to click through each one, evaluate the source, and synthesize the information yourself. ChatGPT gives you a conversational interface with real-time web data. It provides direct answers with citations, not just links. You can ask follow-up questions and it maintains context. There are no ads, at least not yet. And in December 2024, OpenAI integrated local search and maps, which was one of Google's last remaining moats. For many types of queries, I find it to be a way faster and easier way to get the information I'm looking for. And I'm not alone. Millions of people are coming to that same conclusion every single day. But ChatGPT isn't the only player reshaping this market. There's a dark horse that many investors are sleeping on, Perplexity AI. In May 2025, Perplexity processed 780 million monthly queries with over 20% month-over-month growth. They have 22 million monthly active users. And get this, their valuation went from $1 billion in April 2024 to $18 billion by mid-2025. Their annual recurring revenue is projected to hit $100 million in 2025. This is a company that didn't exist in any meaningful way 3 years ago, and now it's processing 30 million queries per day with a 95% accuracy rate, which is 15% higher than traditional search engines. What makes Perplexity dangerous to Google is that it's not trying to beat Google at its own game. It's creating an entirely new game. The average session time on Perplexity is 6 minutes and 26 seconds. On Google, it's less than 1 minute. Why? Because Perplexity users are engaging with the answers, asking follow-ups, going deeper. They're not just searching and leaving. And here's the demographic detail that should concern every Google investor. 53% of Perplexity users are aged 18 to 34. These are young users forming new habits. These are the investors of tomorrow, the consumers of tomorrow, and they're not defaulting to Google. Now, you might think Google would respond to this competitive pressure with their own AI innovations, and they tried. Boy, did they try. In May 2024, Google launched AI Overviews, their attempt to integrate generative AI directly into search results. The idea was that Google would use AI to provide synthesized answers at the top of search results, keeping users on Google rather than clicking through to websites. But the launch was an absolute disaster. AI Overviews suggested adding glue to pizza to keep the cheese from sliding off. It recommended eating at least one small rock per day for digestive health. It claimed Barack Obama was Muslim. It advised people to drink urine for kidney stones. Where did these insane recommendations come from? 11-year-old Reddit comments and articles from The Onion, the satirical news site. Google's AI couldn't distinguish between legitimate advice and jokes. The internet exploded with mockery. The hashtag Google Enough started trending as users shared increasingly absurd AI-generated advice. Google scrambled to add a disclaimer. Generative AI is experimental, but the damage was done, trust was eroded, and here's the thing, it's still happening. In May 2025, AI Overviews claimed it was still 2024. Not for a few minutes, not for a few hours, for several days before Google fixed it. When asked about these failures, a Google spokesperson said, "The vast majority of AI Overviews provide helpful, factual information. The vast majority." That's not a ringing endorsement for a company whose entire brand was built on providing accurate information. But the AI Overview problems go deeper than just embarrassing mistakes. They represent a fundamental conflict in Google's business model. Let me explain. Zero-click searches, where users get an answer without clicking any link, rose from 56% to 69% between May 2024 and May 2025. That's a 13 percentage point increase in 1 year. When Google provides an AI-generated answer at the top of search results, users don't need to click through to the actual sources. And that's devastating for publishers. CNN's traffic is down 27 to 38% year over year. The Planet D, a travel blog that had been operating successfully for years, shut down entirely after experiencing a 90% traffic drop. Chegg, the education company, reported a 49% decline in non-subscriber traffic. The Medium publisher is seeing a 10% traffic decline year over year. But here's the specific metric that should alarm everyone. The click-through rate for the #1 search result with an AI overview was 7.3% in March 2024. By March 2025, it had fallen to 2.6%. That's a 34.5% decrease in just 12 months. Think about what this means. Google is cannibalizing its own ecosystem. Publishers create the content. Google's AI scrapes it, summarizes it, and keeps users on Google. Publishers lose traffic, which means they lose advertising revenue. When they lose revenue, they produce less quality content or shut down entirely. Then Google has less quality content to scrape for its AI. It's a death spiral, and Google seems to have no answer for it. They can't stop using AI overviews because then they'll lose to ChatGPT and Perplexity. But they can't keep using AI overviews without destroying the content ecosystem that makes search valuable in the first place. Now let's talk about the legal hammer that's coming down on Google. On August 5th, 2024, Judge Amit Mehta issued a historic ruling, quote, "Google is a monopolist and it has acted as one to maintain its monopoly," end quote. This was a case brought by the Department of Justice and over 30 state attorneys general. It was filed in October 2020 during the Trump administration. The trial lasted 9 weeks in September 2023. And the evidence was damning. Google paid Apple over $20 billion annually to be the default search engine in Safari. They entered exclusive contracts with mobile carriers and device manufacturers. They used their monopoly profits to lock out competitors. Judge Mehta found that Google held 90% market share in general search services and 95% in smartphone searches, and that they had violated Section 2 of the Sherman Antitrust Act. But here's where it gets serious for investors. In September 2025, after a 15-day remedies trial in April and May, the Department of Justice won significant remedies. Google can no longer enter exclusive default search agreements. They cannot require pre-installation of Google Search on devices. They cannot use their monopoly power to extend their dominance into new markets. Think about what this means. For over a decade, Google's strategy was simple. Pay to be the default everywhere. Most users never changed their default search engine. That's how Google maintained 90+% market share. Now that strategy is illegal. Google has to compete on merit, and they haven't had to do that in 15 years. But wait, it gets worse. There's a second antitrust case focused specifically on Google's ad tech business. The DOJ filed this case on January 24, 2023. The trial took place in September 2024, and on April 17, 2025, Google lost. The judge ruled that Google had formed an illegal monopoly in ad tech. The potential remedy? Forced divestiture of Google's ad tools. Google has appealed, but the ruling stands. And here's why this matters so much. Google search advertising brought in $175 billion in 2023. That represented 73.6% of their total advertising revenue. These legal restrictions could fundamentally alter their business model. They can't pay for placement. They might have to divest their ad tech. Competitors now have room to breathe and grow. Let's follow the money, because that's what matters to investors. Google's total advertising revenue in 2024 was $234 billion. That's an all-time high. Google Search and other brought in $175 billion, which is 73.6% of ad revenue. YouTube ads generated $36.15 billion. In the fourth quarter alone, YouTube made $10.47 billion, the first time a single quarter exceeded $10 billion. Google Network, which includes ads on partner sites, brought in $31.3 billion, but that segment is declining. Google Cloud is growing at 30% year over year and hit $48 billion in revenue. So on the surface, Google looks healthy. Advertising revenue is up, but here's the problem. 60% of Google's total revenue comes from search ads. If search is disrupted, the entire business model is at risk. In the fourth quarter of 2024, Google reported $72.46 billion in total advertising revenue, which was up 10.6%. Search specifically was $54 billion, up 12%. But here's what's concerning. Growth is slowing. More troublingly, Google is reporting traffic growth but declining clicks. What does that mean? It means more people are using Google, but fewer people are clicking on ads. That's exactly what you'd expect when AI overviews provide answers directly without requiring clicks. The company is caught in a catch-22. They're planning $75 billion in capital expenditures for 2025, a massive increase, mostly for AI infrastructure, data centers, and chips. They have to invest in AI to compete with OpenAI and others. But AI overviews reduce clicks, which reduces ad revenue. So they're spending more to build a product that cannibalizes their core business. There's another hidden crisis that doesn't show up in quarterly earnings yet. Search behavior is fundamentally changing. Generation Z is starting searches on TikTok, Reddit, and ChatGPT before they ever consider Google. Google has always said that 15% of all queries they receive each day have never been seen before. That's always been true. But now, many of those new queries are starting elsewhere. Google's response has been partnerships. They signed a deal with Reddit to prioritize Reddit content and search results. They added forum filters. But these are band-aids. They're not solving the underlying problem, which is that younger users don't instinctively go to Google first anymore. And once a habit is broken, it's very difficult to rebuild. So what happens next? Let me give you both sides, because I think it's important to be intellectually honest about this. Let's start with the bull case for Google, the reasons why Google might not just survive, but continue to thrive. First, network effects are still incredibly strong. 89% market share is still dominant. Google processes between 9.1 and 13.6 billion searches per day in 2025. That's extraordinary scale. They have deep integration with Android, which powers 70% of smartphones globally. Chrome browser has 66.3% market share, and it's actually growing. Gmail has 1.8 billion users. YouTube has over 2 billion users. This entire ecosystem reinforces Google search. When you're signed into Chrome, your search history, preferences, and context follow you everywhere. That's powerful. Second, Google is diversifying. YouTube grew 13.8% in the fourth quarter of 2024. It's becoming a revenue engine in its own right. Google Cloud is accelerating with 30% growth. The company isn't just search anymore. Third, Google's AI, Gemini, is actually competitive with GPT-4. The technology isn't the problem. Google has some of the best AI researchers in the world. They literally invented the transformer architecture that powers all modern AI. The problem isn't capability, it's execution and business model alignment. Fourth, Google still has a massive distribution advantage. Even without exclusive deals, Google is the default on billions of devices. Habit is incredibly powerful. Most users won't change their default search engine even if they're technically allowed to. The path of least resistance favors Google. And finally, Google is starting to monetize AI. They're placing ads within AI overviews. They claim that AI overviews generate higher quality clicks, meaning users who do click through are more likely to convert. If Google can figure out how to monetize AI search effectively, they could find a new equilibrium where they provide AI answers and still generate revenue. It's possible. The technology is there, the user base is there. The question is whether they can execute before competitors take too much share. Now, let me give you the bear case, the reasons why Google might be in serious trouble. First, death by 1,000 cuts. It's not one competitor killing Google. It's ChatGPT taking 9%, Perplexity taking a smaller slice, Brave Search growing, DuckDuckGo growing, even Bing taking a bit more. Each one is small, but combined, they're eroding Google's dominance, and crucially, young users are forming new habits. Once habits change, they rarely change back. How many people went back to Yahoo after switching to Google? Almost none. Habit formation is asymmetric. It's easy to lose users and incredibly hard to win them back. Second, the publisher ecosystem is collapsing. Publishers create the content that makes search valuable. If publishers can't monetize traffic from Google, they produce less content or lower quality content. Then, Google's search results become worse. This is a negative feedback loop, and I don't see how Google breaks it. They need publishers to create content, but AI overviews destroy publisher business models. There's no easy solution. Third, the legal constraints are real and binding. Google can no longer pay for default placement. That was their primary competitive weapon. Competitors now have oxygen to grow. There's also still a possibility of Chrome browser divestiture on appeal. If Google loses Chrome, they lose visibility into user behavior, which makes their ads less effective and their search less personalized. And the ad tech monopoly ruling creates legal precedent that could be applied to other parts of Google's business. Fourth, AI is becoming commoditized. ChatGPT, Claude, Gemini, they're all becoming increasingly similar in capability. Search is becoming commoditized too. When multiple products do essentially the same thing, the moat disappears and price competition begins. Google's competitive advantage was always that they were meaningfully better than everyone else. If that advantage disappears, if search becomes a commodity, then Google becomes just another option. And that changes everything. Commoditized products don't command premium multiples. They don't have pricing power. They're vulnerable to disruption. So, is Google finished? Not yet. But for the first time in 20 years, Google's dominance is genuinely threatened. Here's what investors should watch. First, market share trajectory. If Google's market share drops below 85%, that's when you should panic. At 85%, they've lost the network effects that made them invincible. Second, revenue per search. Are they successfully monetizing AI queries, or is revenue per search declining? That metric will tell you everything you need to know about whether the business model works in an AI-first world. Third, publisher relationships. Is Google finding a balance between providing AI answers and sending traffic to publishers, or is the ecosystem collapsing? Watch what major publishers like the New York Times and Wall Street Journal do. If they start blocking Google's AI crawlers, that's a very bad sign. Fourth, legal appeals. Is Google able to overturn or significantly weaken the antitrust remedies? Chrome divestiture would be catastrophic for Google's business. Fifth, Generation Z adoption patterns. Are young users returning to Google as their primary search engine, or are they cementing habits around ChatGPT, Perplexity, and other alternatives? This is a long-term indicator, but it's perhaps the most important one. The users who form habits today will be the market in 10 years. Here's my timeline for how this might play out. 2025 is a transition year. Competitive pressure is building. Google is trying different approaches. AI search is maturing. But Google still has enormous advantages. 2026 and 2027 are the critical years. This is when AI search becomes mainstream. This is when the publisher ecosystem either stabilizes or collapses. This is when legal remedies fully take effect. And this is when we'll see whether Google can adapt. By 2028 and beyond, we'll know the answer. Either Google has successfully adapted to an AI-first world, found a sustainable business model, and maintained meaningful market share, or they've become just another search engine competing on price with thin margins. Not dead, but no longer dominant. Google won't disappear overnight. Microsoft didn't disappear when they lost browser dominance. Yahoo didn't disappear when they lost search dominance. But Microsoft went from 95% market share in browsers to 3% over a decade. Yahoo went from being the starting point of the internet to a punchline. The question isn't whether Google can be disrupted. History shows that every monopoly eventually falls. The telephone monopoly fell. The oil monopolies fell. The railroad monopolies fell. Microsoft's monopoly fell. The question is, how fast does it happen? And are you positioned correctly for what comes next? If you're a long-term Google shareholder, you need to be honest about these risks. The company is still enormously profitable. They're still generating massive free cash flow. But the trajectory has changed. The competitive dynamics have fundamentally shifted. And the legal landscape has turned hostile. If you're considering investing in Google, you need to decide whether you believe in their ability to adapt, because the Google of 2030 will look very different from the Google of today. It has to. The world has changed. The question is whether Google can change with it. That's it for today. This is the kind of analysis you won't find in mainstream financial media. They'll tell you about quarterly earnings and revenue growth. I want to dig deeper into the structural changes that will define the next decade. If you found this valuable, subscribe for more deep dives into tech disruption. Because in this industry, understanding what comes next is the only thing that matters. Today's giant is tomorrow's footnote. The only question is, which companies will adapt and which will fade? Thank you for watching.